Okay, guys, good morning. I'm just messing around here doing scalps till we get started, which will be in about 3 minutes. So far, I haven't had a loser, so what the heck? Just going for anywhere from 1 to 4 ticks, and basically, I'm letting it come to me. It's about to do it again. Come on. Eh. Ooh, missed that by it. Look at that. 7 traded there, and I'm 26th in line. Oh well. Hey Kevin, I'm just messing around with scalps till we actually get started, which will be in about 2 minutes. Good morning, Amy. All right, let's stop playing with those. And 2 more minutes, we will start. Looks like we're getting a decent crowd, 34 here. Can I talk about why I choose that location? I'm choosing that based on a combination of the trading action and where I'm seeing orders. So there's a stack of orders right below there, for example. And so that's a reasonable spot to shoot for a tick or two, because even if the direction's wrong, just the fact that there's some energy there will probably give me a tick or two. But there's an art to doing this, and it's not mechanical that way. You don't just automatically get in front of the large orders. That's a really good way to have them suddenly disappear and you're there all by yourself. So there's more to it than that, but that's most of it is just comparing what I'm seeing with buy and sell orders with what I'm seeing where they're actually getting filled. And up until a second ago, I was seeing a lot of buying and strong buying delta, and that just changed. Now it's on the sell side more, and so my tactics would probably change. Okay, let's see, 1 more minute, and then we will start. And it's 9 o'clock. This is a really good reminder to put up, by the way, at this time of day. Are your setup tactics correct for the time of day? And this isn't the open 5 anymore. And so right now we have a fairly high momentum long breakout that would be hard to be long in. So, and that's because this time of day is kind of notorious. If you look at the process thing that I share frequently, this time right in here, in other words, after the kind of first hour or the first hour and a half ends, and until we get within an hour or two of the close, this is referred by many traders, particularly old pit traders, as being the rookie roast, because rookies get chopped up here. There's usually a lot of different currents going back and forth in the market at this time of day. The first hour has been established. Whatever news came in overnight is pretty much baked in. And, if there was earnings or anything that was linked to a specific specific equity or, within an index or something like that, it's pretty much baked in. So now you kind of get a lot of low volume price discovery. And, even if we're working within some kind of a trend, which we sort of are, although I wouldn't really get too excited about this trend here, this is a very, very well-defined volume profile. So, when you see that, most days are range days. The odds we're going to get a trend breakout, we could, but, I would not marry that point of view right now, particularly this time of day. So anyway, so that's kind of the context I was doing those scalps in. If you were watching me at the beginning, none of those were real setup oriented. That was mostly just watching the tape and looking for places that I thought I could hop in and grab a tick or two. Okay, so no, I have totally abandoned MZ pack. The one I'm using right now is this one. It's shared in both the MZ pack and the Ninja Trader channels. It's a shareware from Futures.io, and there's also the templates for it. MZPack, I was using it a few months ago. It's just not designed to handle any sort of volume. The database is crappy. And, you know, Mikhail and I went back and forth, but it's way too big of a CPU hog. So I literally have uninstalled it, Michael. And, you know, that's the thing about tools. You know, that was a really cool tool when the market was quiet and normal. And, you know, I just don't think that he's ever had this kind of market to develop in. You know, MZPack's relatively new code. So anyway, we'll see what happens. No, I do not use it for my volume profile. The volume profile is just the one that's built into Ninja. And I just have 2 different time frames for it. The order flow volume profile. It's not particularly complicated, but I don't need one that is, so it works just fine for me. All right, anyway, I will take other questions as we go. This session's gonna be kind of informal, but I do have an agenda, and so let me cover that real fast. Now that anybody that's coming is probably here. Again, a reminder for everybody, you've gotta pre-register for every session, and I always post the Zoom link to do that before the meeting by a few days. And the way it works, as soon as you register, a pop-up comes up and says, here's a link to join the meeting. You can either save that or it does email you. And there is a good reason we do it that way. So, you know, please try to get registered for the sessions in advance and try to show up live as much as possible. I get that, you know, everybody has a lot of life going on right now. And I am going to talk to that a little bit. That's part of our agenda today. So first of all, we're going to go through a few things today. I changed the title. Actually, I just added to it. And that's why you might have got a reminder that things changed. But what I changed it to or modified it to was the idea of integrating the DOM trading with your setup playbook. And this is a really, really important point going forward, particularly, you know, as you kind of understand the DOM and the chart to DOM ideas. And a few things come up around that topic, excuse me. One of them, a couple of you have either privately or publicly posted about asking me or commenting about whether you use a mouse or the keyboard and whether I use limit orders or market orders and under what situations. And those are all really, really good questions. So I'm going to talk a little bit to that. But I want to start with a physical question that came up. A couple of people asked me privately and also have posted about, you know, carpal tunnel and, you know, do you click to get in these trades? Do you use your keyboard, et cetera, et cetera? And today's a really good day for that topic because anyone that was in the workshop or has been around a little while knows that I have RA, rheumatoid arthritis, which is not the old people form of arthritis. It is the autoimmune disease. And you can Google it if you want. But basically, my ability to use my hands varies a lot. And as I've gotten older, this has gotten worse, which is typical. So I'm going to answer that question from that point of view, but also, you know, even going back when I was in my 20s and I was doing this, one of the things I learned very early, so this is kind of where I'm going with this, is that you really, the better you get at trading off the DOM and trading order flow, the more focused you get. And what I've found is there were times where I would be watching the DOM and watching a specific trade setup I was looking for. And at the time, well, 9/11 is a good example. I told you guys I was on the cross trainer on 9/11 when the first plane hit. And if you look at that picture back in the deck from the first couple of sessions, I had this big giant U-shaped workstation with a lot of monitors, and my girlfriend would come up behind me and kind of touch my back and comment, "You're so tense." And you know what? I wouldn't even realize it until she would say that. So where I'm going with all this is that this is really hard on your body. If you can afford it, you want to get a really good chair and a really good convertible desk that allows you to work standing up or sitting down. If that's not feasible, and right now that could be a stretch for a lot of people, and I don't even have that right now. I have a great $1,500 relax the back chair, but I've got a folding Costco table as my desk, which I've had for a long time because I move around a lot, but I've actually, I'm going to get a stand-up desk as soon as I've decided that they're really hard to move around. They're really heavy. And as soon as I know what I'm doing in the next few months, as far as where I'm going to be working and living, and that is always a variable for me because, as I said, I'm very nomadic. I could be anywhere, so I just don't want to buy a 100-pound thing I got to drag around with me. So that's my issue. But I strongly encourage you to really understand the mechanics and the biomechanics and the stress and you know, that's why so many of my reminders that you've seen pop up are like, go walk the hill. You know, I live on this big hill, and one of the best things I've done is I just automatically at certain intervals, no matter what I'm doing, is I get up and go walk the hill, and then I come back, and that really helps. So those of you that are, you know, having challenges with that, I totally get it. Today is really rough for me. I'm battling just to get through this, so I totally feel you. With respect to how to interact with your computer, um, and whether to use your mouse or keyboard and what kind of orders. Let's talk to that one. And you guys, I'm just got the domes up here and I'm just kind of watching because every now and then I'm seeing a setup that I like. And there's one right there. Right now, I think this is a fadeable short, but I could be very wrong. My instincts today are going to be crappy. No, there we go. We'll get 2 ticks. And we did. How about that? So, you know, one of the things that's just part of this, if you don't feel well discussion, you know, it's a good idea not to trade. And you've seen that in my process. The first part of it is all about, you know, how I feel and physically and mentally and all that. And you should have that too. Because if you're screwed up in that area, nothing else is going to work in your trading. It's hard enough to do this when you feel well. Okay. Having said that, you can also make it so mechanical with your body that you just learn to see the entries like I just did there, and you can pick up 20 bucks even when you feel crappy doing one lots. So that's the second moral of the story. You know, I have a lot of chronic pain issues and RA and a bunch of other stuff. And so for me to just have gotten to that stage where I could just stare at the dome and just say, okay, that's a long, that's a short, you know, like you've been watching me doing, or if you go back and watch the video, I was doing it before this session got off to a start, and it added up to, it's like $400 at this point. And I'm just literally doing one lots for a couple of ticks at a time. And I've done maybe, I don't know, 15 of them. So my point is, you know, you want to just practice, 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 as we've been saying to you, until it gets that mechanical for you. And, you know, and then when you don't feel well, you know, you can choose not to trade, which is the best thing, but you can also, you know, just scale down and play and still have some fun and sometimes make some money. So that's where I'm going with that. Okay. Next part of that. I have done it a lot of different ways, and I'm gonna, this is Lee. Lee has also a lot of life stuff going on and some bandwidth issues at his end. Excuse me, I see he's logged in. Lee, I'm gonna unmute you and just see if you're actually mic'd up. I hear you there. Are you?
I'm here, Jeff. Hello.
Okay. So I'm going to ask you, that's why I'm bringing you in now. I'm going to ask you to comment on this too, because I know you have a fairly sophisticated approach to this, but I'm answering the question about, you know, mouse, keyboard, clicking, you know, and so let me just get to the bottom line with that for me. Other than what you saw me doing, you know, where I'm like waiting for the market to come to me, as an example would be like right there. And maybe I'd put on a market order and you know, let it come down to this, this limit order. In general, what I do, I don't trade at all with my keyboard. I only use my mouse. And part of that is my health limitations, but part of it is it just works for me. I have even minimized the distances between like the dome and my buttons. You know, I've tried it with, you know, this here and this up here and this down here. And for my range of motion and my pain and the best place is right here. So I can, you know, the distance to the buttons is quick. So saying all that, most entries I use market orders for, and I'll tell you why. It's just the kind of trading I do. If I use a limit order, it frequently, you know, it'll come right near me and it'll maybe even trade my limit price, but I'm too far back in line. It won't get filled. Then the setup that I'm trying to trade will fill, and, you know, it'll do a 12-point run HMOMO. And I learned a long time ago that, you know, just trying to save 12 bucks on that is really stupid. Okay, so that's moral number one. If your instincts and your skills are good, you should enter with limit orders when it's appropriate, but most of the time, market orders will get you into your trade. Maybe you'll get a little bit of slippage, but if the trade setup is good, that shouldn't really matter. Okay, so that's my viewpoint on that. However, I'm going to talk later about wait mode versus scalp mode, and I'm going to qualify that a little bit. But I just want to make the point that, number one, I use a mouse. Number two, clicking distances are really important for me, and having my platform just totally working the way I can interact with it without any confusion or pain or anything else. And then third, you know, if a limit order makes sense for the setups, like, you know, let's say I was going to scale into this, what we're seeing right here in the indexes, let's see, my gut is this is a short. So, you know, I might throw some limits up here and see if it'll come up to me. But I also might, you know, throw a market order on short and then try to add to it, or, you know, scalp a couple of ticks at a time. And that's one way of just kind of testing my, my read and seeing if my read is good or not. So that's how I do it. Let's just let this thing run here for a minute, because I think I'm actually going to get a fill down there. I might get a couple more first. Let's cancel these and just manage it as a 2-lot. Anyway, so while I'll just leave that running, because I think it's going to end up working, and I just want you to see kind of what I'll do with it as it's going. And Lee, so what are your thoughts on this same topic, please?
In terms of how to enter, I enter with market orders. I at least the original entry, and my take on this is, even let's imagine I'm seeing the slowest possible trade. I'm interested in the level, and you know, I know where my entry will be. I feel if I put a limit order in, at least to initiate the position, I've lost control. Because I kind of go with you. You know, we're going to go down there. It's going to fill, but it's not filling on my terms, and let's imagine I'm looking to do a limit buy. Market's pushing down, so I'm interested in buying, but why has it pushed down? And it could easily keep going down. So I want to get a sense of, okay, here's my area of interest, and I don't mind losing a tick or two based on market order. And I never understand the people that, you know, I'm never prepared to buy at market. I'm not going to pay the spread. So, well, you know, hopefully your gains are way beyond the spread. You know, that's like going, oh, I resent paying commission or whatever else. It's like, well, you know what? Don't be in this business.
Yep. Good comments.
So I will scale in with limit orders. You know, once things are in my way, I think the scaling in's a bonus. You know, the trade is paying for the size after that point. So then once I'm comfortably in profit, I'm happy to get filled by a limit, because I want the best possible entry. I don't want the greed to have me chasing myself in. That
was a great point, what you just said. I want you to continue, but if you use limit orders and you don't get in, often the human response to that is to chase it. I mean, that's what I used to do.
And that's a hard one to crack. It's only as you see your average entry price go down, then you protect your stop, and then you get stopped out. So, you know, there is an art to size and scaling in, but you don't need to scale in. You know, you need the best possible entry initially, and after that, you've got a good trade. I tend to use the mouse, and on the trade window in Sierra, I'm hitting, you know, buy market or buy bid, maybe, or sorry, buy ask. You know, it depends. It depends on how fast the market's moving. Typically, I'm comfortable just hitting market, but I've put a link in the chat. I'm a keyboard pervert. I like nice keyboards.
That's a good way to put it. A keyboard pervert. Do you use a gaming keyboard? A lot of people that are traders do.
I use a mechanical keyboard, not a gaming keyboard, but I've got a few floating around. I've got a DAS keyboard. I've got a Philco 10 keyless, so without the numeric keypad, because that gets in the way. Then I've got a separate numeric keypad, which I have by my trading screen, because I might right click or modify an order, then enter the price on the numeric keypad. And I was looking for a really beautiful relegendable mechanical keyboard, and I couldn't find one at a decent price, but I found this one I've put in the chat, which is like $30 or something, I forget. And the keys aren't very nice, but I liked the fact that I could put custom legends on it. And I think the value of this thing is for, certainly for me, commands in Sierra chart where I've got to right click and then drag down a contextual menu. So if I want to reset the dome, or even go flat, you know, flat for me is something I want to hit one button and be done with it. So I'm happy to have a flat key allocated. Clearing columns in the DOM, I've set that up. Things like move stop to break even, or break even +1, or move stop up. I've assigned those to this keypad. So underneath one of my screens, I've just got a numeric keypad, this programmable keypad, and then my right hand's on the mouse. I will still use the mouse really for order entry, because I've still got to click, somewhere in order to activate the relevant DOM. But for the other functions, I do like having keys.
Cool. All right. I have also done what you said. I actually have keyboard shortcuts set up that centers all the DOMs, that clears all the DOM. That I have. For me, it's just gotten to the point, and God, I don't know, this is probably 50-50 RA, and just, I got so good at the mouse that I just have stayed with it. And one of the things I've learned also is to invest in a really good mouse. I have a few different ones, but some of the vertical mice that Logitech makes that, are $100, people say, what, $100 for a mouse? Hey, I'll tell you what. And whoever it was that was mentioning carpal tunnel, I think it was Joe, those are worth checking out. What I'm talking about, if you just go to Amazon and just vertical mouse, you'll see what I'm talking about. Here, I'll show you the one that I like real quick. And I'm not typing well with that left hand. Yeah, here's a few different examples of them. I found the Logitech one is pretty cool, and this Anker cheapy one, if you can't afford the Logitech one, is so. But this is the one I was referring to as $100. It's $80, but it totally turns your hand the other way. So what's cool about it is, I use that and a regular Logitech ergonomic mouse, and I go back and forth, and so my hand isn't stuck in one position all the time. So
and also make sure you've got a wired mouse connected somewhere.
Oh, yes, that's true. I always, my keyboard and mouse are wireless, but I have right next to everything a wired version I can plug in the event that there's any issue. And yeah, you've got to have that thought out. I mean, if anything goes wrong with anything on your platform, you should know immediately how to fix it, be backed up, et cetera, et cetera. Power backup. I run 2 different UPSs that are serial. So one of them is actually running the other one. So if I lose power, I can even keep my internet up and running for as much as 25 minutes. And, that's enough to get the heck out of everything I'm in. All right. So that's a good topic, and I'm glad we covered that. All right. So let's move on from that one. I want to look at questions for a minute, and then I'm going to go back to the agenda and talk about a couple other things. Let's see. From Osman. Hi, Jeff. Yesterday was shopping. Today I'm being more successful on your scalps. I would say that you're probably getting more skilled, Osman. And I would also suggest that the more skilled that a dome trader gets, I hope everyone listen to this comment. Sometimes people drift off. So I will do that periodically. I'll make a, hello, testing. Listen. Okay. And so this is a really important point. The more skilled you get at trading on the dome, the less frequently you will use the word "it's choppy." And there's a real good reason for that, because you'll learn that chop, as you used to perceive it, is actually one of the best things, the best pieces of information. I was about to get long there. I didn't do it quick enough. And so chop kind of becomes like the way you used to look at it when you didn't know what you were seeing. Oh yeah, Raj's point about have your broker's number on speed dial, and yeah, you can always call in and get flat, and that is excellent point. I even have a dial-up connection as a backup, believe it or not. You can still do that, for those of you that remember dial-up connections. Anyway, so that's a really good point, Osman, about chop. The better you get at this, because chop is just another type of price action. Remember, we've got ebb and flow, we've got price discovery, and we've got high momentum, which is basically one directional price discovery. So chop is really ebb and flow. The question is whether it's gameable ebb and flow. But, by definition, chop should actually be pretty profitable for you if you understand what you're seeing. And right now, looking at this particular view on it, I would say what we're doing is we're consolidating and breaking long from each consolidation. And that's what's been happening. So consolidate, break long, consolidate, a little bit of a retest, break long. and we're doing that above the first hour high. So, you know, as long as that level more or less holds, you know, that's worth keeping an eye on. And so, you know, there's a lot of money can be made on the short side here too, but you don't want to try to do it right at these ledge tops because those are going to break out, you know, almost every time. So well, that was quick. So you get my point, I hope. That a lot of times, you know, what I used to consider to be chop really was a good opportunity once I learned how to read it. Okay. Oh yeah, yeah. RA is all about moving around, and that goes back to my point that even if you're 20 years old and you're really focused, you got to get your rear end out of the chair, or at least, you know, using a stand-up desk or going walking around the block. I'll tell you an interesting story. You know, I love to throw them in where I think they're relevant, and if they're not interesting, you just have to be bored for a second. So the first professional experience I had as an adult was when I was hired by IBM, and they literally a week after I was hired, I was shipped off to Atlanta to training, which they do for 2 years, which is kind of cool about IBM. You get a lot of training for free. And one of my classmates in my first training class in Atlanta had this habit. Every time we had a break, no matter what the weather was, whether it was snowing or raining, he'd say, "Come on." I was like, "Where are we going?" He's like, "We're going to walk around the building." I said, "Why?" He said, "You got to get blood into your body. You know, you got to get blood to your brain." And this guy's name was Joe Kelly, and he became a good friend of mine. And so it was interesting. I kind of did that with him, and then, you know, I didn't always do it after that. And so then I was with my company Monogram. We were doing a product for the Mac launch. This is 1982, and we were working directly with Apple. We had a successful Apple II product, and lo and behold, Guy Kawasaki and Steve Jobs came to our office for a meeting, a development meeting, and we took a break to go get coffee, and Jobs and Kawasaki stand up and they say, and they start like walking fast toward the door. And I was like, "Where are you guys going?" "Oh, we're going to walk around the building." And I was like, wow, you know, Joe Kelly did that like 3 years ago. So I went with them. And I later learned reading his autobiography that Jobs made a habit of doing that in meetings, during meetings, you know, going for walks. And so I think that's a really good thing to do. And it has worked for me. So, you know, you've seen my pop-up alarms, walk the hill, you know, those come up all day. And, you know, even if you just, yeah, another thing is I have dumbbells sitting next to the desk, you know, the weight dumbbells, not stupid people. And I do curls and, you know, shoulder presses and stuff like that. Great way to alleviate some of that stress and tension and help with issues like carpal tunnel. Now, even if you just use a 1-pound dumbbell, it can really make a big difference. So, you know, that's a really important point. Can't emphasize it enough. Okay, resistance bands, another good one. Another good one. Okay, so let's go back to this concept. There's two main points I want to really zero in on for today for kind of the meat of this session. The first one, yes, he's here. Okay, well, and the person can, oh wait, you know, he did it publicly. Okay, so John, thank you very much for posting this. John Miller, who's here with us, posted this yesterday, and I'm not sure if you guys saw it or not, but I'll make sure I can find it real fast. Oh, wait a minute, I think I'm in the wrong channel. Oh, yeah. John posted that categorizing the price action is changing everything. And I wanted to make that a big chunk of the topic today, because I'm glad he's seeing that, and a lot of you are. I've had this interaction with many of you. And it really, number one, it makes me feel good because I know you're learning. And number two, for those of you that haven't figured this part out yet, it's just a really critical element of this. So let's go to our the view that we were using before, where we've kind of got this guy over here. And right now I'm running it for gold. I was trading gold earlier this morning. Gold was a great short this morning. I don't know if you guys saw that, but it was a crazy good trade. It was up a lot, and it's still up, but it just was way overcooked. But anywho, let's use, the NASDAQ is a good one for this. So let's use that first. Oh, sorry, hang on. I don't want that. I don't know why those don't go way easier. I try to get rid of them, but I know they're in the database. Okay, so we're going to use the NASDAQ for this little example. And just if you can't see clearly, this is my NASDAQ over here. So that's my NASDAQ dome. Second from the left, this is YM. The one right next to the chart here is the ES. And Let's just make it so we can see the ES tape too. All right, cool. All right, so first of all, this epiphany that John had is such a critical thing to consider for all of you. And like I said, John's not the only one. I had this exact same conversation with at least 5 of you. And what the conversation was, just so you know, we're all on the same page. Early on in the boot camp, people came to me and said, you know, I've been trading for X number of years. I do this, I do that. I really want to kind of learn order flow. And if I get nothing other than a setup or 2 out of this, you know, I'll be happy. And my response to them always is the same. It's like, look, don't try not to take that approach. Try not to think in terms of setups. Try to think in terms of learning just how to read the action and what the action is telling you. And then, you know, let's go out to the idea of setups later on and come back to that. And if you just understand price action, it will open up a lot of mental doors for you. So that's what John was commenting on with that comment. And it's just so important that I wanted to talk about it, and I'm going to do it from 2 points of view. The first is reviewing the price actions and how to just quickly identify them and how to quickly understand what that means for the dome. So that's the first half of what we're going to do. That's the meat today. And we're going to look at those 3 different types of action and what that looks like on the dome and how you can play it. And then the second part of this is really the, you know, things to do next part of it. And what that is understanding how to integrate what you're seeing into your setup playbook, whatever your setup playbook looks like, if you even have one. If you don't have one, you need to make one. And this is not really a boot camp topic. We're going to get into setups with a bunch of other events we have coming. And I've got my playbook's going to be published as soon as the boot camp's over. And that'll just be a free PDF for everybody. It's not really detailed, but it explains each of these. And I know a few of you are waiting for that. So my point here, again, is that, you know, for example, the first hour high and low is a really significant tradable setup. But number one, you know, you got to get the first hour high and low first. And number two, you have to understand that that setup is very different than high momentum scalping. Or right now we have a ledge breakout setup. And let me throw this up here so you can see what I'm talking about. When you're at the very top of the volume profile, that is called a ledge. And it's almost always a breakout in the direction it goes, at least on the first trade. And then, you know, there's a few other trades you can get in there. And again, a lot of that depends on your time frame as well. So this is a, you know, a seemingly complex topic. And the thing that's important to remember here is that there are a lot of layers to this topic. We're talking about price action. We're talking about trading setups that may be foreign to you. And I'm going to use some terminology like that this is a ledge. In other words, it's an edge, which means it's the edge of a profile bump, but it's also a ledge because it's the highest we've been or the lowest for the day. So these are important concepts for these setups. And let's just talk about what they are for a quick second. Okay, this is a ledge because it's the edge of this profile. An edge could also be the edge of a high volume node. So for example, we've got a lot of high volume here. You could say this is an edge, because after that, it kind of goes down until you get down to this bump. But this would still be considered a ledge. We're above it, so we broke out. And then we have another ledge here. And this type of scenario is generally very strong trend in the direction of the ledges. But in order to make it, to really understand it, you've got to go further out than I am here. So let's go out to about 10 minutes, and then you can see why it's important. Give it a second for the volume profiles to populate. And then I'll come back to what I was talking about, the price action, and I'll try to tie this together a little bit. Oh, waiting for data. Okay, here's the data. One more second. Sip of coffee. There we go. Okay. So if you look at my volume profiles, okay, you know, this is a real normal shape volume profile. We went above it overnight, and then this was the open. We blew above that. We have a really nice symmetrical shape. We're at the top of it, and at least the order flow at this moment is fairly bullish. I'm not predicting anything with that. I'm just saying that's what it looks like right here. This is a ledge for this volume profile. But what's important here is that it's in the middle of this one here, but at the top end of it. And so not only could a break of this ledge be important, but if you see it clear this one and then maybe even this one, that would be a way of reinforcing the idea that we have a really strong bid under the market. And so it's not so much the price points that these are at, it's the behavior you want to watch when we get here. And the best place to watch that will be on a footprint chart. And so that's where I'm going with this. I've got the footprint right here, and let's switch this back to ES. The NASDAQ's just moving around too much to make this visible. I think the ES will be a better example. So give that a second to come up. Okay, and while that's doing that, look at my dome right here for ES. And you can see this is my delta since I reset it, which was a little while ago. And you can see all the different in the middle, we've got all the trades that went by on the bid and the ask. And for example, look at that right there. This was a 3-to-1 buying node. So not only is it a high volume node, but it was a bullish high volume node. And there's somebody sitting right there selling. So when I see that, I just say, okay, the odds are really strong. We're going to just plow right on through there. And we're about to do that. So let's watch it. That's where a footprint can be so valuable, because you can see, you know, if you're looking for unfinished business, or if you're just looking at the delta as we get up there, you know, clearly the buyers are in control here, even though there's people trying to sell the top. That's the kind of back and forth that we're seeing. You know, strong buying into people trying to call a top. And so what happens is, they will be wrong, and then they will have to cover those shorts, and we will blast through the high. So that is what happens with a ledge breakout, and it happens over and over again. And it's not necessarily a no-brainer long. In fact, it makes a really good short setup right after it happens. So, and again, I'm not presenting to you guys that any of these things are going to happen. I'm just saying that's the scenario, and don't trade that right now. Don't, you know, go off and try to watch that. Listen to what I'm saying, because I'm not presenting this as a trading setup. I'm presenting it as a way to consolidate your, and it should be admittedly to you, your relatively new understanding of price action, of the dome, and of trading setups. So we're kind of trying to take your knowledge to the next level. Okay. Hopefully that's all making sense. And by the way, you see, you know, look at this on the buy right there. 300 went by on the ask. And so you can just see what I was describing there is happening, but it's also getting sold pretty aggressively. So, you know, this could just do this for a while. It might break out, it might not break out, but this is probably the most valuable price action we've seen since this workshop started, because it's really, really typical action. Now I'm gonna reset all the sides, and then I'm gonna leave the middle there, because see how we're forming a high volume node right here. This is really a critical spot, because if the buyers can hold there, they're gonna stop those shorts out below that and the ones that have been shorting in here, and you're gonna see it just plow right on through the high. So that's likely to happen in the next few minutes while I'm talking. So don't trade it. Don't do it because Jeff said it might happen. I'm trying to teach you something. So watch what's happening, and see, you know, do you see shorts here getting nervous? And, you know, watch when they bail, watch when they say, puke. And, you know, if they do that, they might not. The shorts could take control here. I'm just saying that this is just a perfect example of an inflection point. Tons of volume, trade on both sides, you know, battling back and forth around the high of the day with a pretty interesting footprint view. And, real quick about the footprints, you can look at it fairly quickly like I'm doing, and that can get you in and out of trades. You could also take a little bit of a step back from that and see if there's any kind of a underlying bid or you know, overwhelming ask above the current trade. And I'll tell you what, the minute I do this, I like to just take a mental snapshot looking at that footprint. What is your immediate sense? Who's winning? And my sense is the buyers are. And, you know, I think I'm about to demonstrate what I was saying was going to happen here, that we're going to blow through the high there, but we may not. And you know what I'm going to do just so we can watch the delta. So remember the high volume node right here. I'm going to reset the whole thing so we can get kind of just a clean view and watch the delta from scratch and see what happens. So So what we're looking for here is, number one, what kind of price action are we seeing? Which category does it fall into? Is it ebb and flow? Is it discovery? Is this high momentum? And that's a really good quiz question. I'm not going to answer that right away. I'll come back to that. And then within that, are we seeing a setup that we could trade? Is there a range that's going here? Or is Jeff going to be right and we're going to get a long breakout here that's just going to go bat crazy long because there's a whole lot of shorts here that have to cover suddenly? Yeah, my money's on that one, but we'll see. I've been wrong before. Okay, here we go. But fasten your seatbelts. Zoom. Okay, we just took out the high. Let's see if we can extend that. Oh, and by the way, if you're curious that's what a linear regression looks like when this is happening. On the very fast intervals, the small one will get pushing up against the edge of the other one. And ultimately, the fast one will typically cross the slower one. That's when you've got a really big breakout, but that's not a trading signal. By the time that happens, it's over, as you can see. So, God, you know what? It's like instead of teaching class, if I just put on a 10 lot and let that setup happen, I would have made a couple $1,000s. So whoever asked me in the free session, why don't I just trade instead of doing this? There's a really good example of how that does cost me money. All right, let's stop there for a second. Two components to really getting good at this. Number one, when you're watching this action, you have to be able to put it into a category that the price action falls into. Sometimes it falls into several of them. What would I call this right now? I would call this really, really sweet ebb and flow, because it's ebb and flow pushing in one direction, almost getting to H-Momo, but not quite. But I mean, if there's any doubt in your mind that this there's a bid under the market, then you just haven't learned to read the tape yet, because I'm telling you, there's a bid under the market. Okay. So price action, that's the one half of it. And remember, that always breaks down into ebb and flow or price discovery, which is the really crazy back and forth in both directions, or high momentum. And that's just price discovery in one direction. And no, this isn't it yet. There's little bursts of it, but this really isn't high momentum. High momentum goes farther, faster, like when we're crashing. But remember when I said that back there, that was a 22, we're at 26, 4 points, guys. That's why I don't call trades, because you can't learn anything if somebody just tells you, buy that long and yada yada yada. Okay, so price action is one half of the equation, and then the other equally important one is having a playbook that has good setups in it, like this. And if you do get high momentum, or if you do get an edge ledge, there's that setup right there, the ledge breakout. That's a great setup. When you get it, you go with it. It's managed very, very differently than a high momentum setup is managed. And so that's the other half. So one half is price action. The other half, and remember, there's 3 different kinds of price action. And then the second component to this integration of price action to the dome and to your charts is, what setup am I trying to execute? Is that setup a really fast kind of scalping setup, or is it kind of a first hour high, scale in and out, kind of what I call a wait setup? Understanding the setup in context of the price action is how you take this entire thinking process to the next level. And that is what this session is about today. And that's the meat. I'm not going to go through 100 different setups. I'm just going to show you a couple examples, but that's what I want you to understand. And notice how, now we're back. Remember, this setup always gives you 2 trades. It always gives you a long, and then it gives you a short. And let's take this out to 90 seconds so you can see both setups. And that long was really sweet. That was just so predictable. I started talking about it when it was down around 16. So it was like down here. That was when I started explaining that setup. And then when I said it was pretty much going to happen from what I was seeing, that was when it was around 20. And then when it got to 22, it was pretty much a no-brainer. We got the breakout. That's it right there. And then anybody, with the other half of their own brain, took profits and looked at that as a great short scalp. And now at this point, the trade's over. We're back in that consolidation area. And so you shouldn't be trying to predict this. You know, I would expect this consolidation that we broke out of to at least get tested and will probably hold for a while. If it doesn't, you know, and we just blow through the downside, then, you know, that short was even righter. That just doesn't seem like what's going to happen today. It might be, but I don't think so. All right, let's let this finish populating, and then we'll stop and pause for questions. I realize this is a whole lot of information, but, you know, guys, a few of you have said, God, this is going so fast. You know, that's why it's called boot camp, and that's why it's only 2 weeks. You know, basically what you signed up for was for me to just fire hose stuff at you and do my best to, you know, answer questions and help you along the way. So, and as I've said, this trade is now over. You know, the long is over and the short is over. There literally is not a trade right now with respect to this setup. And, you know, look at the LRCs. The fast one is horizontal, now turning slightly down. We're at the bottom of the long one again, which, if you recall, is often another good counter trend entry. In other words, in this case, long. You know, you can take that or not. I'm not going to talk about the setups anymore because I want to go back to theory. And I want to take a breath, and I want to take questions. Yes, Emilio, be like water. Okay, questions. I'm going to go back and roll through the chat, so give me a second to read what you guys have been typing. Yes, the Logitech is awesome, Raj. Joysticks also. Some people use touchpads. You know, the bottom line with anything in this space is do what works for you, not what Jeff said to do or Lee said to do, or, you know, the Furu at, you know, instantmagicindicator.com or eMiniVinny. You know, I hope he hears that I'm talking trash about him, because I've been doing it for years, and, you know, I want him to show up in one of my free classes, so, you know, I can explain why he's completely full of crap to his face. You know, I do it on Twitter all the time, as a bunch of other traders do. For any of you that are familiar with that scam artist. Okay, let's see. Oh, you know what, David, really good example. And David, if I'm not mistaken, you also do physical training. I saw you posting about, you know, how many eggs you eat a day and whatnot. And, you know, there's a real strong correlation between being good at trading and being physically the best you can be. You know, as I've said, I've got a lot of issues, but I'm also pretty fit. And, you know, I walk 10 miles a day, and so, you know, you gotta keep your body working. This is not something where you can be, you know, a couch potato and trade well. I have a friend who trades from a recliner because he literally has trouble getting out of it. He's old and has really, really bad physical issues. And he's got this entire like lazy boy set up as a trading chair with a joystick, and he's got an ailment that will literally paralyze him soon. And he's figured out a way to make still work and still trades. And, you know, he doesn't take a lot of risk, and there are days he can't do it, but it's really important to understand how physically demanding this is, regardless of how old you are and whether or not you have, you know, any diseases that are making it worse. Okay, I'm looking for questions here, and I'm not seeing a lot of them. Okay, Michael, that would be cool if we had tests where we had to name the price action. Actually, I am going to do that. We are going to do that. That's coming up. Okay. What is my opinion on the price squawk sounds? Oh, gosh. Okay. I'm a little biased, Morris. And, you know, again, I'm always really honest. Here's my opinion and my experience with price squawk. When I first tested the idea of using audio as an enhancement, I loved it. And then this is back when I was using Ninja 7 and the plugin. And one of the problems with that is the minute you enable that, it destroys when you enable price squawk in Ninja 7, it destroys all of your workspaces. And this is a known problem. So I emailed Graham, who's the guy who wrote that code, and he owns price squawk. And I basically got told I was a fucking stupid idiot because I was still on Ninja Trader 7. And that was 2 years ago. So, that wasn't a good experience, you know, not unlike my experience with Trade of 8. You know, I call him like I see him. So Graham is popular, and his code is popular with young guys in prop trading firms. It's not well supported. He tends to have the response that there's something wrong with you if you can't work his tools. They suck a lot of CPU bandwidth. And after I finally got them working and I used them for a while, I really liked them for certain setups. But the bottom line became, what they did was they taught my brain the setup. And then after that, I didn't need the audio anymore. And it just became distracting. So that's a very long answer, Morris, to a question. I love his drills. The drills that he posts are great with respect to, that tool and him, as an independent software support person for a product that, he sells. I would be very cautious. And again, everything is different for everybody. And, I'm a hard ass. If somebody, if the first response to somebody, to me, when I buy a product or I'm testing it and I email support and the response back is, "You fucking idiot, what are you still using Ninja 7 for in 2017? Then immediately, that product is probably not going to be one I'm going to integrate. And, the same was true of Tradeovate. Here I have a known issue I published, I have it documented, and, the CEO decides that he's going to insult me with something that's not true about, IP addresses. So that just shows you that maybe that's not a vendor you want to work with. That's my opinion. But the drills he posts on his websites are wonderful. He knows the prop space. And that's really all there is to that. So that's my answer. And it's a complicated one because I think that tool has a lot of potential. Okay. Yeah, there's a few others out there. Todd, thank you for pointing that out. Was it the fucking or the idiot? You know what? It's funny because Mikhail, the guy who runs MC Pack, is kind of a similar personality. He's a real hardcore Russian, but I kind of like sparring with him because he comes across in broken English and he's trying to joke with me at least. He'll say, "I already told you this, Jeff, 4 times, but I'll tell you again, and I know he's sort of joking. The problem was that Graham wasn't joking. He just literally would not answer my question. He's just, well, when you're fucking on the current platform and not a legacy platform, I'll deal with you. That was his answer, literally. So, you know what? Sorry, I'm not going to give you $50 or $100 a month if that's how you interact with customers. And some of you might end up someday feeling that way about me, and that's fine. Everybody has their own space and does what they need to do, and that's cool. There's 7 billion people on the planet. Maybe that number is going to go down after the virus, but whatever. That means there's plenty of people. You don't have to get along with everybody. Okay. Let's see. I did notice, and even with Ninja 8, I've tested it, that price squawk, if you have it configured anything but optimally, is really a sucker of your CPU because it's trying to interpret tick by tick what's happening, and then it's converting it to voice, and that requires horsepower. Trust me, I've had a lot of experience with voice recognition and voice apps going all the way back. Okay, so price action, bar ebb and flow. Does it consist of multiple up thrusts and springs? That's a great question, but no, they're not up thrusts and springs because by definition, to be an up thrust or a spring within a trading range, and let's just pull up some charts here so we can see that. Okay, so here's 20 seconds. And this is probably a pretty good example. And by the way, the guy who wrote the first hour high and low thing asked me to just check and see if it was working right today. So let's see if it is. So that should be, yeah, it got the first hour high right. It's right there. Yeah, no, I think that was a quirk last Friday. I know a couple of you had trouble with that when you saw where it was painting my prices. And I think that was just a bad data feed from Ninja, a bad tick in the database, because I can't recreate that. It's working again. Anyway, so let's talk about price action and springs and up thrusts. And you know what? Let's see. Do I want to do that on 20 seconds or something different? Let me think about this for a minute. Let's do this on the 30-second interval. And let's see how many days it's going to have. 3 days. Yeah, that should be enough. Okay, so first of all, it's really important, and everyone, okay, this is one of those times where, we've been chit-chatting and I've been answering questions, and now I'm going back into really important meaty material, so wake up and listen. Okay, so first of all, the time of day is really critical because, ebb and flow at night looks different than ebb and flow during the day, right? During regular trading. This is ebb and flow right here in regular trading. So, whoops, I was trying to draw around that. Just, if you kind of just take a box around this section right here, it's between the opening 5 high and the first hour high. And, we're just kind of chunking around in here. That's a really good example of what ebb and flow looks like. And it typically does do this between, say two levels like that, the opening 60 and the opening 5, or, whatever levels you're looking at. That's not uncommon. And basically what's going on in there, and I don't mean to confuse you, but it's kind of like a little bit of baby price discovery. Okay. It's just kind of back and forth. It's ebbing and flowing. Nobody's really committing to anything. Any news that was going to come out economically would have happened back here. We already have the first hour high and low in. So, this is typical of intraday ebb and flow. That's very common what it looks like. At night, it looks different. It looks like this. And notice how, how much thinner it is. There's, you could have a couple of minutes where just a few hundred contracts trade. So it's important, again, to not only consider the price action, but consider it within the context of your setup. And if I go back to my playbook, what is the number one criteria I'm looking at? Playbook, best setups by time of day. I mean, that literally is the scale of my playbook, whether it's overnight or it's regular trading hours. So this is a really critical concept as you watch the chart, to understand that, when it's on the dome like that, it can look like almost nothing is happening. Typically during the day, the late afternoon golden oil will do that, in about an hour from now for the rest of the day, because they settle earlier. So they'll kind of just go to the point where they look like they're really not even moving. But that's, how that instrument, remember, they're all different, behaves, and that's how it behaves during regular trading hours. But the indexes will get a lot more interesting and aggressive, like you see what's going on over here in the NASDAQ. But oftentimes, again, if you look at a chart, you'll see that overnight, it looks like gold looks during, the late afternoon. So those are important considerations. Time of day is one of them. What type of trading setup are you considering? If I look at this chart, but I look at it from the point of view of a minute, this is all of a sudden going to look like it's trending, and all of a sudden we're going to see springs, because on a 1 minute chart, there are some really well-defined springs. And this is why you'll hear Lee and I say over and over again that you can make a chart prove any point you want. So now, Bar, what I'm going to do is I'm going to answer your question outside of ebb and flow. And let's just make the assumption that the market is moving in a more or less of a trend. So, what do you have? Do you have ebb and flow, or do you have price discovery, or do you have HMOMO? Well, the answer is you really don't have any of them, but the one that's the closest to being correct is it's ebbing and flowing with a slight trend. By definition, this point is lower than this point, so we do have a trend. And we're above the first hour high, which is another common definition of a trend. So, you could argue pretty much any way you want that you've got a trend here. Okay, cool. So if that's the case, remember, back to the playbook, springs and upthrusts are only legitimate under current market conditions if we are actually trending. So given all these, assumptions and all of these, we have to get our time of day right and our setup right and all that. If all of that is true, then what you have here, let's look at it. Okay, aggressive, forget the open, it was pretty crazy. Once we settled into this ebb and flow right here, okay, what happened? Well, we left that area aggressively long. And, I'm sure everybody who was watching that was watching this, because that was the nearby high. So what happened was we pushed up, a little bit of pullback, it got bought. So we had a spring away from this ebb and flow consolidations. We consolidated again, we sprung away from it again, and look at this area right here, okay? Because that's that area that was that top, and look at that one bar right there, how it just, got, I'm zooming in on it a little bit here. So that was that high, and so we accelerated up, and then the sellers kind of front ran that. Didn't get any traction, then it came up, and look what happened right here, okay? So as that high got tested, we blew right past it with another spring, and then a pullback, and then another little shimmy, Pete at Jigsaw, 8-tick dance, tried to test that exact same area. It got bought again. We had another spring away from there. Pull back, another spring, pull back, another spring. So that's the answer to your question. Again, you can only define a spring if you look at a time frame that it might fit on. And so within that context, the answer to your question is yes. I hope that made sense. And for those of you that it didn't, you'd have to understand springs and up thrusts and all that stuff. But there's a couple of really good points there, even if you don't understand that setup. Number one, first you have to understand the price action. Number two, you've got to put that price action into a context for the time of day. Lee frequently trades, and many of you that have traded with Lee and learned from him or are using Sierra charts, he frequently trades unfinished business on 30-minute footprint charts. And for those, which is clearly a wait setup, because you're waiting for that 30-minute to form, that time of day criteria and whatnot are really important. I mean, the price level itself is really only the first piece of that. So if you need a way to kind of think about this whole conversation, write down right now on a piece of paper. This is the notes I'm working from. Number one. Okay, and good. Thank you, Barham, for saying that. So the first thing, number one, is what's the price action, or the PA, as people like to say. That's the first question. And there's three kinds, and they look different at different times of the day. At night, ebb and flow looks different than it does right now. That doesn't mean it isn't ebb and flow. It just means it looks a little different. And what would I define this price action right now? Again, is the same. We're still ebbing and flowing within that LRC, and right now we're at another spot where counter trend says if the long trend is in fact happening, here's the spot you could buy long. So that's what the LRCs are saying. Heck, let's just do it and see if it works. Okay, and we'll just see if we can catch a one ticker there. And now if you see a spot like that happen and it starts getting really aggressively sold, then that's I got my tick. So there you go. Why did that work when it looks like it's getting sold? It worked just because of statistics. The odds of the bigger one are what? 96%. We covered that in previous sessions. The odds of the smaller one are what? 96%. So right now we have the intersection of two 96% events. That doesn't mean that we can't go through it to the downside. It just means the odds of getting a tick there are really high. And that's why I took that. And it looks like now we may continue down. So you just have to have no bias, and you have to understand the time frame you're trading, and you have to learn to integrate price action, which was number one there, into number two, which is, within your playbook, what setup are you working? And, is it a scalp type or a very fast, or a wait, more of a, 30-minute type of a setup? And the next thing we're doing, literally, Lee's next event is on his playbook, and I am publishing mine. So if you don't understand that, just sit tight. We have more material coming. But a playbook is a very critical part of your trading structure, the infrastructure. And if you don't have one, and you're not constantly improving it and gaming it as I've just described, then you're missing something. And also, if what I just said makes no sense to you at all, and you don't know what I'm talking about, that's to be expected too, because these are new terms to you. But just to clarify again, and then I'm going to pause for questions and let Lee comment, let Amy comment if she wants to. So Amy, if you're mic'd up, I'm going to give you an opportunity to do that. If you're not, that's cool too. So this entire thing is my playbook. I have, or my process rather, this entire thing. My playbook is this part of it right here that I just highlighted in that color. My process allows me to be competent to trade. My playbook shows me the best opportunities based on math at certain times of the day and based on the instrument that I'm using. So that's what that's all about. Okay. David, what helped me clear my bias when I first started? Ooh, gosh. It's really hard to learn how to not have bias. I still do it. And the example that I gave you earlier about feeling crappy, I feel really crappy right now. Maybe you can tell by my tone of voice, or my energy isn't quite as high as it usually is. But we're going to scalp this for a long rather. I just feel like they're gonna hose some shorts here in a second. So maybe we can get in on the hosing for. And this may or may not work. Like I said, I don't feel really well, but I bet it does work. My read on the tape is generally pretty good, even when I'm feeling crappy, which is the point I'm making right now. But I'm not really watching this all that well. Let's see here. Anyway, so so the answer to that is, you know, I learned that that when I felt crappy, I'd make better judgment calls like I'm doing right now. And you know why it is? Because I can't think as well because I feel crappy. So I'm just going on my instincts, and my instincts have gotten good. So it took a long time. It really did. Bias, you know what? If some of you embrace this, but I was shocked at the lack of comments and people saying, oh my God, I printed that out and I'm going to use that. You know, last session I posted this thing right here about biases. 2 people clicked, oh, that's cool, or, you know, they liked it or whatever. If you haven't printed this out and pasted it on your forehead, you missed a really, really important point I made last session. So I'll leave that at that. Okay. And Lee, I'm going to let you hop in here. And I know you probably have a lot of good insight into this and maybe some of the questions. So you're on, Lee. Whoops, I thought I unmuted you. Where did you go? There you go. Okay. Are you able to go, or should I come back to you, Lee? I will come back to you. Okay. Amy, I don't know if you even have a mic. Do you have a mic, Amy? You want to say hi? There you are.
I do have a mic.
Okay. Hey,
You may
everybody.
hear horses or dogs in the background, though.
That's all right. Everyone say hello to Amy. Where are you? In Florida right now?
Yes, I'm in Florida, just outside of Jacksonville.
Cool. All right. So what's your take on this from your point of view and your experience? And give everyone 3 seconds on how long you've been trading and what you do.
I came in this backwards. I started learning from a value perspective and then into options, and I got my butt burnt that way. And then I got into futures about 1.5 years ago. And then I think I met you along about the time I discovered that you could get funded with other people's money.
Yes. Yeah. I think we met in the Top Step group.
Yeah. I had a couple of months where I made like 10 grand. I was like, wow, this is easy. I can just like blow through this. And then I had months where I would like lose 500. And how do you get consistent? And you can't budget on that. You can't. I'm very systematic, so it was driving me nuts. I learned to adjust my expectations. I learned that what I thought was hitting a base hit was really a home run. When you have a $3,000 or a $5,000 account, one tick is a lot, percentage-wise. It's a lot. So between you beating me up just enough, it's like being forged in fire.
Right. Tough love.
Right. And it helped me adjust my expectations. And when I got them a little bit more in line, and just started developing the skill and really putting in a ton of seat time and more all the time, that's the only way you start to. I still look at your screen and it looks like NASA to me. So I have to really dumb everything down and just get really good at one thing that I know I can count on every single day, and then do that for a period of time, like a long time. And then you can always add another contract.
Share with everybody. How long have you, since you started working out a process, and I watched you go through this, that was how long ago? Like 9 months now? 6 months?
Not even. It's been, since October, November?
Okay. So 6 months.
Yeah.
Cool. That's awesome. Thank you for sharing all of that. That is really, really helpful. And I know the rest of you guys who've seen Amy typing and whatnot, it's nice to connect a voice and whatnot. And oh, Joe, that's a great comment that you're making. I need to chime in on that. And yes, thank you very, very much, Amy. And we will look forward to you sharing more along the way. What Joe just said is critical, though. People that come from even just managing your own retirement account, You know, you have to think long-term bias, and you're just constantly told that you have to think long-term bullish, and, you know, and people don't short in their, you know, retirement accounts and yada, yada. And you know what? None of that could be further from the truth. So I hear barking in the background. That's probably yours, Amy. Let's
Yep.
see. Let's see if Lee, are you back with us? Do you want to chime in on this topic?
Yeah, I am. So a few things. Amy said about, get good at one thing. Absolutely. If you learn one setup and that's all you do, fantastic. You can be at your computer for 10 minutes per day, and on the days it doesn't happen, then you've lost 10 minutes. On the days it does, fine, you make money, and then you can get on with better things. So, trading is about collecting a set of skills that you can do repeatedly. But to my mind, it's false economy wanting to be in front of the screen 8 hours a day. This is crazy.
Okay, that was that. That was the pause that you ended, right?
Yeah, but my brain's run out of.
Yeah. No, I'm really tired too, and I'm just playing around here, doing micro scalps for fun, based on literally just the ebb and the flow, and I'm just kind of scooting stuff around so people can kind of watch while we're talking. That's really the only reason I'm doing it, because it's fun to watch. If you've never watched somebody that knows how to do this well, it's fun to watch them do it. And right now I'm going to load this one up because I think this is a long trap, and sure enough, it's probably going to work out, but I'm going to keep it pretty tight. So anyway, all right. While that's going, I'm not even watching it. I'm looking at the Q&A, looking for more questions, and I see a bunch of them. Okay, so let's see. I wanna put a couple of examples together, and let's just let this one work itself out here. You guys asked me a lot when I reset, and I want to show you this is a typical time when I will, because I know where all those high volume nodes are, and I really want to get a sense for the instantaneous tape, which shows me I'm still on the right side of it, which I am if I try to add to a trade like that and I can't get filled. So this is one of these things where, this trade's probably going to work pretty soon, but there could be a wicked squeeze against the shorts, so I may just flatten out of it. And you guys ask a lot, when do I decide to reset and when do I recenter? And it's really just based on the setup that I'm trading, right? And like this one, I'll take, it gets back to break even, I'll start scaling out of it. And then all of a sudden I'm just wickedly profitable like that. And sometimes I can lock it, stop in behind it like that. And so now we can just trail down. Well, we got filled. Anyway, so there's a good example of that. On a day I feel like crap and I'm talking and I'm teaching at the same time and I'm reading the questions over there. If you can get yourself to the point where you've practiced enough where the rhythm will just be intuitive, then that's when you found your Bubba. It really is. Okay.
And you know what, Jeff? Thinking about this and the idea of flow.
Yes. The book Flow. But go ahead, keep talking. I'm going to put that
being in this state of flow when you're trading. Yes. I've noticed in the past couple of weeks, in this volatility, you have got to let the market show its hand during the day session. If we go back, a month, 2 months. There've been really nice structural trades of, trade the second 30-minute period to the edge of the first 30-minute period, look for the initial balance breakout. But because we're so thin, we are moving so broadly at the moment, it's very tough to get precision in your entries. And so you've got to scale down, you take a bit more heat, whatever. But there are some really nice setups at the moment. I mean, I'm short at the moment, ES from somewhere near the top.
Yep.
Because the nature of what's going on has changed. It's exploring in both directions. We're getting both sides breaking a lot. I haven't run the stats yet. But you sit back, you wait for an hour or two, and I'm pulling up like 30-minute chart, just see, okay, where are we? Then I'm looking a bit more closely, and you can get these beautiful swings which pay you for the volatility that you're having to take on and the risk you're taking on. But yeah, you've really got to step back and just watch for 30 minutes, 60 minutes and go, okay, what is going on, and get attuned to it. And it's no different to the more normal times, or we're in the new normal, staring at the dome until you feel you get that sense of what's going on. You can't just turn on your screen and go, oh, opportunity, bang, take it, because you'll lose.
That is absolutely great stuff, everything he said. And I'm real quickly switching this to a 5-minute footprint. So you can see an example of what Lee was saying. And remember, literally just a couple of minutes ago, I was doing a long breakout of the high trade, which you can see here. You know, it did this little consolidation and then it pushed up. So it was up in that area when we were doing that. And now you've been watching me for the last 10 minutes, just taking literally market order scalps as they come along, because they're telegraphing themselves to me, and they're all on the short side. Because, you know, just look at 5 minutes, one after the other, we're just cascading down. Now, that means, you know, it's a profitable play, but could you get some heat against you? Great point. Yeah, I mean, I was even doing it with those 3 or 4 I was scaling into. It was going, you know, $400 or $500 against me, and I was only taking, you know, $200 profits. And, you know, those of you that are Furu programmed in the audience are saying, wait a minute, the risk reward was wrong there. And no, because I've literally just done 20 of those in a row, and I haven't had a loser. There's no risk, guys, because I'm reading the tape to do it. And I just hope that makes sense. I'm not at all suggesting that at this point, you know, in your career, you should be able to do that, because, you know, that's just not reasonable. But I want you to also forgive yourself and give yourself a break, because, you know, it's going to take a little time to learn how to do this. It really is. Oh, did I not set that right? Why is it still doing 5 minutes? I thought, there we go. Okay. So, and that's one of the reasons I use such fast intervals on my footprint charts, because, you know, what Lee was talking about, you know, shorting that high, if I wasn't talking to you guys and I was just sitting at my desk, I certainly would have made that play. That was a really, any trader with a brain would have, you know, we did that run up, and then since then we've just been, you know, cascading down, and, you know, I've pushed it all together here so you can see it. So, you know, your mind should have automatically gone to that concept when that that high got sold. I don't know what's going on here. It's trying to get data, and it might take it a minute. Ninja sometimes gets overwhelmed with a data request. So let me just get it out of the way, which might also take a minute. All right. So what questions do you guys have while I'm waiting for Ninja to respond to me? And I may have to kill it to get it to do that. I think it's hung on this one. I might have given it too many days of data. Yep, that's what I did. All right, well, hang on. A couple ways I can fix this. Yep, that's what it's doing. Let's see if I can get it to stop. Okay, anyway, I may or may not be able to, guys, so I'm gonna do something else here. Give me 1 second. This is every now and then I make this mistake with Ninja where I put in like a second time frame and I forget to take off the number of days. So it goes out and tries to get, you know, 15 seconds of data for a week or whatever. And let me see if I can just kill that window. But with Ninja, that can be very hard to do. All right, hang on one other second. My Zoom is also hanging up. I can't get to the toolbar, which I need to do right now. There we go. Okay. So 1 second, boys and girls. Yeah, this is not gonna be happy. All right, I'm just gonna see if that will catch up before, so I don't have to kill it, and let's take questions. Okay, so Var, with respect to 5-minute opening range, is it legit to consider his initial volume profile and then look at 60-minute opening range for, I'm not sure I'm following you, Bar. 5-minute opening range, is it legit to consider it as an initial? So you're saying taking the 5-minute volume profile and then comparing it to the 60-minute? Yeah, you could do that. I mean, I look at the 5-minute as just a range, really. I don't really care about the volume within it, because it's typically so crazy that the volume can be, what's the word I'm looking for? Exaggerated is the word I'm looking for. Hang on, I'm gonna kill my data feed here, which will let my platform catch back up with me. 1 second. By the way, that's a good trick to know for Ninja. If it ever does hang because of a mistake like I just made, if you kill the data feed, it will often catch back up with you, and then you can just restart it or whatever. So my data feed has stopped, just so you know. I'm not running live here right now. Okay, so Osman, you've had some bias issues too, work as a financial planner. Oh gosh, you know, this is a really, really, really common problem that Joe mentioned and Osman mentioned, where people that are in the professional financial business, have to be doing one thing and telling their customers something else. That's a really hard thing. And so I'm just restarting Ninja. And I don't have any good, I'm at a bit of a loss to give you anything useful for that, other than you really have to learn to manage your own biases, because gosh, I run into that with, all my friends know that I'm a successful, scalping day trader, and they ask me for investment advice. I'm like, I'm the wrong guy to ask about investing. I don't invest. I'm a trader. Although the one example I gave you, my ex-girlfriend, who's one of my best friends, she asked me 2 weeks ago on a Monday, we're already down 15%. Should I sell? I said, we're going to go down a lot more than that. She liquidated, and she's like, thank you for telling me that. I'm like, cool, but please never ask me that again. I mean, I just don't want to give, people advice like that. And so I get where you're coming from, Osman, and that's a really hard thing. You need to learn to manage that.
Jeff,
Yes,
I'd chip in on that a little bit. I think
Please do.
There's a simple thing on that, which is asking, well, would I buy it here?
Yes.
If you don't want to buy it here, well, it's not too cheap, and it may be on its way to being too expensive. So that's a way to police that. But the other thing which I found, and I've failed to take advantage of this 2-3 times in the real world, is look at what's going on in the real world. And I remember in the mid 2000s, I had a business in automotive electronics, and I had a meeting at Daimler Chrysler in the UK. And I remember walking around the parking lot for you Americans, and I saw all these Chryslers, and I thought, what the hell are all these rubbish American cars doing in the UK? And I thought, this isn't going to work. But, did I short the automotive sector? No. And it was staring me in the face. In 2012, I think, I thought, well, Rimmer in trouble, BlackBerry, did I short it? No. I did short Dixon's, the electronics store group in the UK, a couple of years ago. But when you get doubt over macro stuff that is relevant in real life, act on it. So I think that's a good way to overcome long bias for sure.
That is really great advice. And when I have traded equities, which right now I'm not in the market at all. I rarely am, just so you all know. In fact, you know what? I need to give everyone a little more of an idea about my point of view on just financial markets to answer this question. So this is a great question. You guys are answering great questions. And that's one thing that always, even when I feel shitty, this kind of energy keeps me up. So I'll stay with this and continue to answer questions. And there's a bunch of really good questions in the chat, and I will get to all of them. First of all, I want to agree with what was just said. And then I want to go back to, is there a good book on price action? No, there are no good books on price action. I'm sorry. Anybody that really understands it well, Lee made a good point a couple of sessions ago that people that are good at this are not good teachers. And, we're hoping to make that an exception here. That's kind of our mission. But I don't think there are any good, Lee, have you ever seen a good, published book on price action? I don't know any.
No, I'm quite allergic to the phrase price action, actually.
Yeah. I mean, I damn too. There's a guy, what's his name? The guy, Al something or other. Al Brooks, Al somebody.
That rings a bell.
Yeah, who's got like 40 different books on price action, price action and trends, price action. The guy's just selling books, guys. Everything he says is not wrong, but it's not that complicated. You don't need a book. Here's the book on price action. There's 3 kinds: ebb and flow, price discovery, and high momentum.
How about consequences of volume?
Yeah, it is. Consequences of volume is a great way to say that. All right, we'll come back to that. More questions. All right, this one a number of you have asked. How do I transition from wait to scalp mode and vice versa? And there's a few answers to that. If you look at the picture of my desk, there's a little 3x5 card on it that has the words scalp and wait, and I literally flip it over. I'm not kidding, If you look at the picture of I think it's in the master's pictures. I'm not sure. I think I threw up. Oh, shoot. Okay. You guys may get a message that you can't scroll back because we have to pay for Slack and whatnot. We're about to address that. Yeah, we've all gotten too big for our britches. And so now we're going to have to start buying corporate Slack, which is sort of expensive anyway. But the picture that I'm talking about, I think there's one in survey, and we're going to do that in the next day or so. So don't worry about that. If you're trying to go back for older messages, we will correct that. But anyway, let me just show you what I'm talking about, because it's kind of important. It's a methodology to do that, which is what you guys are asking me for. And this is one of the ways that I found worked. I literally physically flipped this piece of paper over, and I'm just trying to speed read my way to see the picture where I have the picture of my desk that it is on. So just give me a second to do that. It's right next to this thing. Picking up $20 bills, Ace King, good setups. It's right next to that. So I'm a big believer in, okay, see that stack of cards right there that I'm pointing to? There's one right there, and on it, on one side it says scalp, and on the other side it says wait. And that is literally the way that I keep my head in the game. And it's gotten to the point where I don't always have to touch that thing, but I did that for probably 2 years before that was true. Now, also, my setups are broken down that way, which is kind of what this session was about. And just, previews of coming attractions, that's where we're going for Thursday. Thursday, I'm going to talk more about specific setups and specifically what kind of price action you should be looking for, and specifically what that looks like on the dome. But obviously, I couldn't do all that until I introduced all the terms, and that's why we did that today. So I hope that makes some sense. All right, let me go back to the questions. So Kevin, I hope that helped your question and answered Michael's question, and et cetera, on those topics. Okay. I said I was going to explain a little bit about my philosophy of the markets, so you guys can understand kind of my point of view, and I'm going to do that real quick. I do not own any stocks right now, and I do not own any real estate. I am 100% in liquid fungible assets around the world. And those are in a variety of cash or cash equivalent futures account deposits. That's my worldview. I agree with Lee right now that anybody calling a bottom right here is just insane. I've traded through some big world events. This big world event is just getting started. It is not over because the United States is going to throw $2 trillion at it. That will buy us some time, but that's it. So for me, it's all about liquidity and fungibility. If you don't know what fungibility is, Google it. But it's about being liquid anywhere in the world in multiple currencies. That's my worldview. I don't want to own any assets right now. And if I did, I would have liquidated them already. I did have some real estate trusts. They're gone. I did have some various other things through that. My LLC is part of another, if you went through the workshop or if you watched the videos, I explained this once before, but my LLCs are members of other LLCs, which are members of other LLCs. And that's how I protect my businesses and my tax shelters and all that. And literally across the board, there's only one of those that still has any positions. We own some equity in a pre-IPO company that's going public this year. And beautifully, it happens to be in big pharma, or not big pharma, it's startup pharma. And it's an autoimmune treatment that, in fact, one of our angels is Michael J. Fox, and it because of Parkinson's. So might even help my RA. So anyway, so that's kind of my worldview. So if I was a regular human, United States citizen type person that had a 401k and owned my own house and all right now, I would be getting liquid so fast. You could hold your breath while I was, because the opportunity of a crash in the market is to buy stuff on sale, and we're not even close to on sale yet. Now, I'm not a financial advisor. I'm not giving you financial advice. The only reason I said all that was so you guys could understand my point of view, because that's what I'm trying to teach you from. And, you all have to find your own points of view and your own bubbas and what works for you. So please take everything I just said within that context. But I tell you all that so that you understand my worldview as a trader, because, clearly that affects how I trade, and you've heard me say before, my view is that my default position is to be flat. I only go in the market when I have an extraordinary edge, when I have an ace king or close to it. Sometimes I screw up and I do a pair of tens, but I generally won't go in the market worse than that. And my sole purpose being in the market is to extract money and get back to the sidelines. I don't want to be right. I don't want to catch trends. I don't want to, make sure that I didn't leave meat on the bones, or I didn't, I left too much on that trade. I should have, none of that bullshit, none of that nonsense. I enter the market to extract money as quickly as I possibly can so that I can get back to the sidelines where I have no risk. Okay. So I hope that's important. Yeah, Slack is a ripoff, guys. It's going to cost us like $10, 12 bucks a piece for every one of you. So, but we got to do it now because we have so much data. So cost of doing business, but please understand that, we try to keep our memberships as cheap as possible. Our philosophy is to be as close to free as we can get it. So, that's our mission, and we think we're delivering on that. But, as you can see, the Slack is about to cost us a lot of money across the board, but that's a growth pain, and we like that. Okay. Oh, yeah, it's much easier to write a book. Jim makes a great point than to trade. And, I've never fallen into the write a book trap. I just don't see it's too easy to write a book that somebody can develop good ideas and an edge from. And a good example of that is Trade's About to Happen, Weiss's book, or Markets in Profile is another good example of that. And, you still are going to have 100 crazy people a day sending you emails about how much money they lost because of what you wrote on page 13 isn't true. Believe it or not, Lee and I get hate mail like that from people that didn't stick it out in the group. I signed up because I wanted to learn the first hour high and low setup, and you talked for 2 weeks and we never discussed the setup. What's the entry? What's the confirmation? Where do I exit? And, we're just like, how many times do we have to tell you the market doesn't work like that? So understand all that and mold that into your world. Okay, let's see, back to the questions. Good. And, Kevin, remind me to dig into that. That is our topic for Thursday, but I really want to get granular for everybody. It's our last full-time session. We'll probably have an office hours after it, but, I really want all of you to try to be there live, and I really want you to bring your questions and where you're at to that. Let's see, to answer a question from Jason Cargill. Yes, you do. Momentum tails are just another really good way to see, the current energy in the market. And I frequently, Pete is really cool about just throwing tools at us. Like, you may have noticed that my little gauges are gone. Sometimes I use them, sometimes I don't. What is he talking about? Hang on, let me just, the Zoom is making it so I can't get to any of my toolbars again. Just give me a second to actually physically grab. It won't let me do that. Zoom, what is your problem? Okay, now I have my toolbar. Okay, so these things, you can get these meters. You guys have seen. I sometimes use them, and these little gauges. Like, here's one. I had this down here before, and I'm answering your question this way, Jason. It's all these things are really cool. Like, under these kind of market conditions, that little gauge is a really handy little thing to have. And the momentum tails, you can see them right now painting a pretty cool little picture. So the answer is I use them all, but it all goes into this idea that we're going to talk about on Thursday, the next session, of it's really about, integrating them into your setups. If you were trading the first hour high or low, the momentum tails probably wouldn't be the most important thing. The footprint would probably be more important as a tool because, you're looking for, exhaustion, for example, not to spend too much time on that term. Look at this guy sitting here with 200 lot, and he just got filled. So now you can see that's on the buy side. So here's a really good example of how to watch a high volume node that just got formed. So that guy got filled right here. So 95 is now your inflection point to be long from. And if it goes below that, right now, look at all these heavy players on that side. Everybody, including me, saw that 95 got bought. And if they're short, they're on the wrong side of the tape. So they're covering, and that we're seeing a little bit of that. And, a bunch of people saw the same thing and saw it as long opportunity, which is how I would have read it. I would have bought 95 and probably been taking profits right here. But if you look at the delta, this is the delta since I've reset. It's not going up. It's just churning here. And it's probably going to have to clear 99 to really escape that 95 breakout. So, and now it's testing the bottom end of it. So this is a really good example of just how dynamic price action can be. Somebody threw up a 200 lot, selling it, got filled, had to cover, and all of this is going on over, periods of 10, 20, 30 seconds, a minute. So, That's why the whole idea of wait and scalp kind of mentality is really important. I would have entered that as a long scalp 95, and that trade's now over. Now it's a potential, short 99 3/4, maybe short 98. That's kind of the read I'm getting now. Maybe even short there, maybe even short the market. Who knows? It's whoops, that was fast. Jesus, that was. I'm short, and I'm just picking up $20 bills here, and got another one. So that's how quickly that your read can change. And so I hope that made sense, Jason. That was a really good question, by the way. And I've seen your questions and seen your posts in Top Step and whatnot. And I know you've been around this game a while. So you're getting good stuff because you're assimilating to what you already know. And that's good. But I see it with an element of tabula rasa, and that's also excellent. Yeah, that's a good suggestion, Jack. We don't want to make another Slack, but we might figure out a way to move some of the functions to a different platform. I don't know. We'll figure it out. Okay, Kevin, there are times when I'm scalping and winning, and then I have a few large drawdowns. Well, stop. Okay, you just answered your own question. I am scalping and winning, but then I have large drawdowns. Then you stopped scalping. I don't have to read the rest of your question. I'm being hard love on you, but you get it. The tip is, you weren't scalping anymore. There's no such thing as a large drawdown when you're scalping. Okay. So you missed a step. Okay. What step did he miss, boys and girls? He missed this one. Step 5, insanity check. If you were scalping and you had one trade that was anything but a small winner or a break even or a large winner, that should have been the end of scalping, but you probably went through that loop a couple times without checking for insanity before you realized you were not scalping. So that's my answer to you. Frequently with new traders, the answer is in the question. Absolutely. By definition, scalping, you have to do that. And you're going to cut something that would have been a winner off sometimes doing that. And that's just the way it goes. What's a Momo tail? That's a feature of, Joe, that's a feature of Jigsaw. It's what you're seeing how when I reset this and when it gets going one way or another, it kind of colors it in a continuum. In Jigsaw, that's called a momentum tail. And it's literally taking a certain number of milliseconds and just drawing like a little mini heat map. That's all it is. It's a cool little feature. Okay, looking for more questions. Joe asks, how do I decide? Okay, that we've already talked about. We did that one, we did that one, we did that one. Al Brooks, we did that. Yeah, I've actually thought about writing a book, but it would be more of a trading memoir, Amy. Slack, we did that. Education, we did that. Okay, so Jack's asking, with the caveat being what has been factored in already? Impossible to know. Not sure what you were commenting on there. Okay. Scalping is the only way all of you should trade. Jim said scalping is the safest way to deal with the markets for me. If any of you still have the misconception that you're not a scalper, you haven't been listening. You are a scalper even if your scalp is the entry to a swing trade that you're going to hold for 3 hours. You're still a scalper because if you get the scalp entry right, the rest of your 3-hour trade will take care of itself. If you don't get it right, then you got a bad entry and you're not learning what we're here to teach you. It has nothing to do with the fact that you are a swing trader. Scalping is how you get good entries to your swing trades. Please learn that. That's a key point. Okay. Yeah, what is the name of a scalp? By definition, everything's the scalp when I enter it, of course. If I'm going to hold it for anything that's defined as longer than seconds, it's not a scalp anymore. That's wait mode for me is if it's going to be more than a minute, but everybody could have a different definition. One of the people that I mentor directly, that I actually physically coach, and I get a percentage of his winnings. So that's I have a real vested interest in that relationship. For him, it's 5 minutes. So for me, it's a minute. And that's fine. His setups are different than mine, but he still treats everything like a scalp and manages risk with the same idea that if you enter the trade and it goes wrong and the thing that you entered it for is not there, you get out immediately and you take the loss. That's just the way it is. It's like, If you play poker, I'll give you a good poker example if you're a poker player. So I'm a Texas Hold'em player, that's 7-card stud. And if you're not familiar with the game, what happens is they deal 2 cards down to everybody. So you've got 9 players and everyone's got 2 cards down and nobody can see anyone else's cards. And that's where ace king comes from. The best hand you can get 2 cards face down is ace king. Or depending on your style, you could argue a pair of aces, but from a statistics point of view, you're wrong. Ace king's a better hand. And most poker players would agree with that, but rookies always go for aces. All right, so let's say, the cards get dealt and I have a pair of aces or ace king, the 2 best ones. And so everyone goes around and bets. And, I'm going to bet pretty aggressively with that hand because I've got pretty good odds at that point. It's not a no-brainer winner. My odds are still less than 50-50 to win among those 9 people, but I'm going to go ahead with that. All right, so we see what happens in poker, if you've ever watched, is then they flip over 3 cards, okay? And so now you basically could make a hand. And if I was ace king or a pair of aces and it flops, a 7 and a 5 and a 10, basically nothing that helps my hand, then I'm instantly going to reevaluate the fact that I no longer have a really good advantage. So I can either bluff or I can see how the other people bet, or I can just say, you know what? If I had aggressively bet this, I could try to bluff it, but, good poker players know that generally doesn't work. I might see how much it'll cost me to see another card. But do you see the thinking? The second I see something that no longer supports my edge, I immediately go into protecting myself from losses. I go into risk management mode. I stop thinking that I've got a great hand instantly. Okay, so that's a really good example for you. For a couple of you that asked a few different ways about how to do that. Kevin, that applies to your question. It applies to Jack's question. It applies to Jim's question or point about scalping. So I'm sort of scalping and poking my big foot in, when I bet on those aces or that ace king. But you never want to overcommit, and you frequently see rookie poker players will go all in or on an ace king or a pair of aces. And, with 9 people at the table, that's just really stupid. If you got a huge stack, maybe, but it's really stupid because, there could be somebody that already has a good pair of queens, and that guy's probably going to beat you unless, you get lucky. So that's my point. Let's see, 3 outcomes. Yeah, small winner, small loser, big winner. So you see how my brain in that example went from, I could be the big winner here. I've got the best hand. I've got aces. Went from, okay, I got to protect my stack. The second it changed. And that's because I wasn't in the hand when I was betting my ace king, but as soon as I had more information, I had to adjust. Okay, so hopefully that's useful. Todd asked me thoughts on trading treasuries. I don't know if you've ever seen anything John Grady does. Todd, he trades treasuries and he calls it scalping. A scalp might last 3 hours in the treasuries because they don't move very quickly. And bless his heart, John makes good money doing that. I mean, I would keep a loaded gun on the desk next to my head because I would have to blow my head off if I sat in a trade for 3 hours. I mean, it's just not me, So again, I understand how people can do that, but I could never, ever manage my emotions for that kind of trading. So I hope that answers your question. Okay, Jack says you were commenting on whether or not the market is, done in a move. Okay, yeah. Oh, that's very, very true. Yes. There's all these guys always on Twitter, there's a whole group of furus, fake guru, by the way, when I use that term, that's what that means. They take some one statistic and they think they can use it to trade. So they become like the guru of the VWAP or whatever. There's actually a guy called VWAP Trader that does that, who's an experienced market maker. And I mean, I know him and I'm watching him. He's got this Furu group. He's charging $199 a month for, trading around the VWAP, and it's all nonsense. And, he's doing it to make money and it's criminal. But look, where is the VWAP? I don't even know where it is right now. Let's go find it. It's dark blue on my domes, and I don't put it anywhere else. So let's see where it is. Where the heck is I don't even see it right now. Anybody tell me real quick, just roughly where it is so I can, there it is. Okay. So it's 56.75 using the CBOT market profile time of day session, okay? So, you know, that's so irrelevant. It's not even meaningless. It's misleading. So, you know, there's so many people that try to take a statistic for value. And I was commenting on Jack's point, and it's so true. There's no value here. There's value at this given second. So, you know, for example, look over here at the volume profile for the ES. We have a very beautiful symmetrical range profile. I mean, they just don't get more properly shaped than that, and we're right in the middle of it. So at the moment, you could very easily say the market is roughly at value, and another term people use is balanced, and they would be absolutely correct right now. And that's why that ledge breakout was such a good long and then short, because just the vast majority of days are range days. You know, true trend days where we start at one end and, you know, we just trend all day are just so rare. And yet everybody is a trend trader, you know? So I love your comment, Jack, and you're absolutely correct. You know, metrics are just silly. So thank you. Good point. Great point. Oh yeah, you do have to play the long game. That's why protecting your stack is so important. You know, in that poker example I gave, you know, I could put a reasonable bet against that ace king or that pair of aces, you know, because there's some bluffing and there's some psychology I could use. And maybe, you know, if I came in really aggressively, a lot of people will do that with a pair of aces. They'll bet really aggressively and just try to scare everyone, you know, out of the hand or out of the trade. And, you know, depending on where you are around the table, if you're the big blind, the small blind, you know, if you're in the cutoff position, you know, you can do that if you're a good poker player. So trading is the same, except we just don't know as much about the other players. But the metaphor and the analogy just completely holds, and the psychology of it. So, you know, that's why, you know, people ask me if I was going to open a trading school, what's the first thing I would have everybody do? Learn to play Texas Hold'em and play it straight on your computer, you know, a couple hours a day, every day, because you learn to manage money and risk. You know, if you're a skilled poker player, you'll always have winning hands. But if you don't manage your stack, you'll lose. And trading is the same way. You can't bet the farm on any one hand. You can't go all in trading. You have to learn to take nice incremental winners and not big giant losers, Kevin. You can't put the words "I'm scalping" and then I have a big loser in the same sentence, because you just explained that you don't have the discipline when you're scalping to stay scalping. There's no such thing. The biggest loser you should ever have scalping is maybe 8 ticks. You know, if you got just swept out on a bad entry. You know, 12 ticks if you were just really bad. But, you know, that if you're a good scalper, one trade like that out of 100 shouldn't hurt you. 1 out of 10 like that will kill you. And so that's telling you you're not a good scalper. You're not disciplined enough. Okay. Did I ever do drills? Oh, are you asking me, Joe? I've done drills since I thought I explained that. I started doing them in 2013. And then when I purchased a license to Jigsaw in 2014, I started doing all those drills. There's no drill that you could find on the internet that I haven't done. I have. I just, now for me, you know, picking up $20 bills, the 1-tick drill, you know, here we call it, you know, in TRG, picking up $20 bills, but it's the 1-tick drill. That one, the cut and reverse with scaling, those are the 3 I do regularly, because those perfect the skills that I use in my particular setups. And again, this is our topic for Thursday, the integration of drills, setups, playbooks, and price action. That's what we're going to talk about in the next session. You really want to be here live, guys, if you want to get the best out of it. An example is today. You guys are asking such good questions, you know, because you're dialed into what we're talking about and you're watching me, you know, pick up 20s here. I don't know if anyone's adding it up, but I'm up about $690. How do I know that? Because I'm really good at doing math in my head. I'm one of those freaks of nature. And I also speed read. You know, if you watch the workshop, you can learn about that. And again, none of this stuff, I don't say any of this stuff to tell you, oh, you know, Jeff's such a cool guy. Whenever I say stuff like that, it's so you can understand where I'm coming from when I do something or I say something. I'm a 60-year-old with a 20-year-old's reflexes. I'm fast. But if I rely on that as an edge, I get cream because it's not always there, and my RA tempers that. So, you know, one of the things that will make you a good trader is to be so honest with yourself that, you know, it's a no bullshit zone. Your friends and the people that you talk to will call you on your own BS. Well, that's why I tell you guys all this stuff, so you understand exactly where I'm coming from. And I think it makes me a better instructor because, you know, you can assimilate it into your world. But you need to do that yourself. If not with me or with your trading partners or with other people in TRG, you need to do it with your wife or your husband or your kids, or, you know, somebody needs to be in a position to call you on your BS, and you're accepting of that. Otherwise, you'll never get good at this. That's a really important thing. Okay, so Kevin's telling me your losers are 12 ticks, so you need to get hit 3 times. If that happens more than 1 out of 100, then your read's bad. Now, here's another common thing that mistake that people make as they're learning. And, you know, just to share with you guys, Kevin's a really good trader. He's been funded a few times and been unfunded for making mistakes. And it's a really great shared experience for all of you to learn from. And he's a youngster. He's in his early 20s. He's one of our prodigies, like David Tomas is. And Kevin, what that tells me, if you have, you know, more than a couple of those out of 100, is that what you're probably doing is you're getting a few scalps in a row that are winning, and you're getting overconfident, and your judgment about your ability to read the tape is becoming biased. And then once that happens, you're screwed, because you're going to take a couple of big losers. Hey, so David is a really good trading partner for you, isn't he? At 20 years old, he's pretty smart. You know, I got to say, David, are you here in this session? You usually are. Yeah, there you are. Okay, you know what? Don't let that go to your head, buddy. So, you know, I'm so psyched that you guys are hooking up. Somebody asked me, why don't we assign people trading partners? We're just not going to do that. That's not our personality. But what we do is encourage, you know, where we think it's a good fit, and that's what we did with Kevin and David. So yeah, they're both young, and, you know, they can learn a lot from each other. So that made my day, hearing that David told you that, because he's right, Kevin. Listen to him. You know, it really should happen organically, and it is happening, and that's what's so cool. All right, you know, when Amy was out here, I had dinner with her and her husband, and then she drove back across the country to go back to Florida while her husband's deployed, and she stopped and had lunch with Maria. And, you know, that's one of the really cool things about TRG. You know, this is not furu bullshit. You don't come in here and we sell you the magic indicator, and then you realize that it doesn't work and you leave, and then, you know, we take the next fool. You know, we really are building something here that is quality. I really think so, and I think a lot of you are getting that sense. So that's cool too. All right, I see some other comments and questions I want to jump in on. Jim says VWAP, fibs, etc. work because a lot of people, exactly, Jim, and that's why the algorithms can take those guys out of their trades so easily. And that's why here we define those places by inflection point. If it just turns out that the VWAP or a fib or whatever becomes an inflection point, we'll see it. And so we'll end up being on the right side of it just by virtue of watching the tape. And it's just too easy for an algorithm. Think about it. If you are in a programming shop and, you know, you got 100 MIT masters and doctorate degree programmers, and that's what those algo shops are like, how long would it take to program every major indicator in and then just have your algorithm fade it by 4 ticks? It would be so easy. And guess what? I know at least 6 shops that's exactly what they do. They're algo HFT shops, and that's all they do all day long is whatever the furu of the month is, you know, whether it's the VWAP or it's Bollinger Bands or whatever. They literally monitor that on Twitter, and they just write code to just literally take advantage of.
Yeah, well, that's unfortunate, guys. So we'll see.
Did we lose sound? Am I back or not?
Yeah, you're back now.
Okay, how long was I gone for?
Oh, too long.
Not too long or too long?
Too long. It's always too long without you, Jeff.
Oh, fuck. All right. Did you guys get the algo shop example?
Yeah, and we
Okay.
thought they'd assassinated you. Yeah.
Yeah, that was the last thing I was saying was that that there are shops that literally take every indicator and code it up, and so don't be stupid and think that those things are actual tools. They're not. All they will do is show you where you could see a potential inflection point. Okay, this is run really long, and I'm looking back to see if I have any other questions. I don't see any. All right, so Lee, let's wrap this one here. So I'm gonna ask Lee and Amy if they have any questions or comments they want to point out, and if I missed any, and then we're gonna do burning desires and wrap it up in the next 5 minutes. So first to Lee.
Yeah, I promised to speak to Momentum Tails for David. So, David, I'm going to give you something to think about. If you look at the jigsaw settings for Momentum Tails, you've got 8 colors, and you can set how long each color is valid. So, what this is visualizing, I'm not going to call it an indicator, you are able to track where price was over a period of time. And I think the default is 4 seconds because we've got 8 inputs, half a second each. So you're seeing the movement of price over time. This is no different to thinking about a time-based chart and then tracking the range of price over a number of bars. And you could put bands around the bars. It's the same thing, but visualized vertically, not horizontally. So your question was, does it show order regression? Well, price moves because of volume traded versus available liquidity. The price movement is just a function of that. So just think through these inputs and what the tail is showing you. And it's showing you that the traded volume stripped out a certain amount of liquidity over this distance over a period of time. That's what it's showing you. And on your charting platform, play with visualizing that in a couple of different ways. Try it horizontally on a very quick time-based chart, and then you'll start to understand the mechanic of what's going on and whether or not that can help you when you visualize it vertically. And I appreciate I've rattled through that quickly, which is partly intentional because your homework is to put a screen grab of the horizontal version of this in Slack and explain it to people.
Okay, that's awesome, and we have to upgrade the Slack. But I also posted an example of that in the Bootcamp, and I said the same thing. I'd really like you guys to look at some charts and look at the both the just bar-based chart and the footprint-based chart. Hang on, let me get mine up real quick. There, Zoom is hiding them. Where's that one that I want? There it is. Oh shoot, it's got it over. Hang on. I always got to chase stuff down. Okay, so this view is what I was talking about. Compare that to the dome and compare it both in this style and in this style, and do it for whatever instruments you like, and that's a really good homework assignment. So spend a little time doing that, and also I would add another piece to that. Try to put it into the framework of the setups that you've been trading, whatever those are, and see if that makes any sense, and if you can start to see the relationship there. Oh, don't tell me. Yeah, no, this is fine. I thought that interval might have had 60 days on it again, but no, it's cool. It's caught up. Okay, so that was a really good point, Lee. Thank you. And let's see. I don't know if you're still mic'd, Amy. Are you? You want to say anything before we go?
I'm still here. Yeah, you know what? Some of the comments that I'm reading, everybody's starting to do some of the one-tick drills, and I'll just say what changed like my world was just lowering my expectations like a crazy amount. Like if I could just get one contract, one tick a day and be in the green for 30 days, could I do that? And I challenged myself to just do that. And then can I do 2 contracts and do that every single day? And so, yeah, you're not making a whole lot of money, but what you're doing is you're creating real solid consistency and the confidence. You don't have any big losers ever. You don't ever have a losing day. For me, that changed it all, because then I was like, well, hell, I know I can do that every day. So all I have to do is get an account big enough to do 10 contracts, one tick, 2 times a day, and I'm done. And I've just done that. I've just having that mentality, that and doing a ton of the one tick drills. Now I can go in with confidence every day and pick off $100 or $200 or know that the environment's not there for me, and so I don't try. So I don't like to gamble at all. I want this to make me money. I want to grow. My husband's been kind enough to let us just live on his income. I've always made more than him, so now I'm trying to turn this into something that matches what I used to do. And it's been a humbling experience because it's way harder than I ever thought. But if you just lower your expectations and really just get consistent, then you can always add contracts. That's what worked for me.
Okay, I'm sorry, I had to unmute myself. That was awesome, Amy. Thank you. Great stuff. And my experience wasn't dissimilar to that, everybody. And my recent experience, when I was learning order flow in 2014, I did 10,000 tick drills, and I just wasn't getting it. And then the thing that made it work for me was when I did that thing I showed you where I blacked out the prices. The day I changed that, I was doing tick drills, and from that point forward, I almost never had losers at all. It wasn't like, you know, if I didn't have big losers, it was like what you watch me doing when I'm doing these sessions and I'm just picking off a tick, 3 ticks, and there's every one of them is a winner. And sometimes it goes against me by 6 or 8 ticks, and I still win. You know, it comes back, and I got to tell you that the confidence that I have in that came from taking the prices off and just day after day, just playing with the pattern and the ebb and the flow and learning that ebb and flow. Oh God, here's a really good point I meant to mention. And we'll talk about this more. I just got jumped on by a critter and it took off my headset. Let me throw the critter back on the bed and finish this point. And the point was when I started doing that and taking the prices off and just jumping in with that pattern recognition that naturally as humans we have, then I started trying to do it on the NASDAQ and I realized, wow, is this a different animal? And I broke it into 2 categories again. And I said, okay, I can consistently make money in the ES because I really understand how large traders think. And the ES is the show. If you know the baseball metaphor, this is Major League Ball. If you're going to trade oil or the ES, you're trading against the best traders on the planet. Every other instrument has a lot of room for error. ES and CL don't. So having said that, I went to NASDAQ and I learned that the patterns look completely different. And that was my topic in a previous session where I was showing you, and it looks like so much movement on the dome. How could you possibly trade the dome? Well, the trick with trading the NASDAQ dome is not to use the dome. You look at the chart and then you put the orders on the dome. But sometimes, you know, with this volatility, I'll have to scroll right down here and say, okay, I want to put a buy order down there and I got to go all the way up here and I'm going to sell up here. And you saw me do that in a session 2 sessions ago. And it works great, but the trick is just ignore the dome other than to see, look at these momentum tails we're seeing right now. So if I was short, I would know I'm absolutely in the right place. But the movement can really deceive your brain into thinking there's a lot more movement than, you know, in reality there really is. So, and that was like a whole nother learning experience for me after, you know, learning, you know, the 1 tick kind of approach. So anyway, I want to say one other thing about that too. You know, just what Amy said about, there it is, walk the hill, right? You know, and this is a reminder, I don't usually trade the close, but the close, if we have high momentum, is just a gift. They literally just hand you money. You know, if we have one of those sudden moves in the last half an hour or whatever. Okay, this is getting to be a really long session. I see a few more comments and questions, so really quickly, I'll try to take them. Yeah, a lot of margins have been raised this week. Oh, and also about what Amy said, you know, making $100 or $200 a day really adds up, guys. That's $1,000 a week, and you know, $4,000 a month, and you know, most people can live off that, or at least ding their living expenses. Anything a day is better than what's going on out in the world right now, you know. And it's not hourly either. You know, if you do that well, you can bang it out in 5 minutes. So it's hundreds or thousands an hour. So anyway, okay. So John's asking me, yes, about the margins. Yeah, even on micros, they want $1,000 overnight now. So anyway, yes, Anita, thank you, and thank you for staying with us. I know it's later there, and I also want to say that you know, go back to my fungible and liquid comment. You know, one of the reasons I do that is I don't have to deal with margin calls. I keep my assets in liquid form in my brokerage accounts. So I never have that issue. And there's a lot of ways you can do that. You can put up a T-bill or a bond instead of cash and, you know, still have the benefit of it. A lot of brokers will let you put up other stuff. Yeah, you guys know what I'm talking about if you've been around for a while. So, so in that sense, the margins aren't an issue. But yeah, if you're trying to trade, like I have our $1,000 Motley account and I tried to do a micro trade last night and it bounced it out, insufficient margin. I'm like, what? You know, so I sent a message to the desk and they're like, yep, overnights are $1,300 right now. I said, on micros? Yep. I was okay, you know, and that was, at that particular trade was Ninja Traders, Phillips Capital. So then I called another broker where I have a really big account and asked him, he said, no, you know, you can do them $50 if you want. Don't worry about it, you know, but there's 6 figures in his account. So, you know, he doesn't really have a lot to worry about. So, you know, you understand. Okay. Long session. Good comments from everybody. Great questions. Thank you very much. I'm about ready to drop. So burning desires, questions going once, questions going twice. If nobody has them, this meeting is going to end right now. Thank you guys. Thanks. We're out of here.